G'day guys, and welcome back to another episode of the Aussie Investing Machine. In this episode, I wanted to talk all about the company Dicker Data. Dicker Data is an ASX listed company, and they're an Australian distributor of both hardware and software IT solutions. Dicker Data of recent has had some really strong market price moves, and their underlying financials really support this strong upward price trend. Make sure to stick around until the end of the video, and I'll take you through my detailed financial analysis that I've done of Dicker Data, which shows just how strong their balance sheet really is. I wanted to break this video down into a few sections, and they are the company overview, the high-level financials, the future outlook for the company, the current value of the company's market price, and then finally, as I said, we'll go through their detailed financials. Just noting that before we move on, this video is not financial advice and is for educational purposes only. Before making any investment decisions, make sure you do go and see a licensed financial advisor. If you enjoy the video and learn something along the way, make sure to subscribe to the channel and always give the video a like. It really helps the growth of the channel. So section number 1, the company operations. Let's have a look at exactly what Dicker Data does. It took me a little bit of time to understand what the company's operations actually are, and I found that the best source of information was their customer side of Dicker Data's website. These are their key operations. Number 1, selling hardware and software to corporations. Number 2, providing technical support and planning to these same organizations. Number 3 is selling logistical solutions. And number 4 is selling financial solutions. In essence, Dicker's promise to customers is that they will improve your business's profitability. They achieve this through providing products, services, and support. To me, it seems like this offering will appeal to businesses that don't have a strong in-house IT support team. These may be companies that really want to invest in IT technology, but don't have the knowledge or the know-how to decide what package is suitable for them. This is where Dicker Data comes in, and they can provide a full package solution for companies, from providing the hardware to also providing software support and even setup. In addition, they can also offer financing support for customers. For example, if there's a cloud-based subscription service that a customer wants to use, but payments are due mid-month, yet the customer only receives cash receipts, say, at the end of the month, Dicker Data can defer the payments until the customer is ready to pay to help improve their cash flow. Now, I suspect there would be a fee attached to this, and it's another value add that Dicker Data can provide, really at no cost to them, but it is another way to generate revenue through their customers. Let's move on to section number 2, which is the high-level financials. I won't go into too much depth here, as we'll get into the nitty-gritty at the end of the video in the last section. Their gross margin is not too bad at 9%, and their net margin is a little low at around 3%. Their debt levels for the past few years have been quite high at around 1.6 times equity. The latest guidance has shown this fall significantly down to about 0.6 times equity. The company also provides consistent and growing dividend payments, and this is quite unusual for a growth company, but it's in line with Dicker's policy that they'll pay out 100% of after-tax profits to investors. Usually we would see a growing business reinvest profits into the business to continue expansion, so this is a little bit unusual from Dicker Data. We'll get into more detail about Dicker's financials later in the video, but for now, we'll move on to the next section. So section 3, let's have a look at the company's future outlook. The main thing I wanted to point out here is that the 2 founders of the company, David Dicker and Fiona Brown, are heavily invested in the company. Their ownership stakes of the company are 37 and 32% respectively. This gives them majority control of the company. For me, this is a massive positive sign, seeing that the founders of the company are still heavily invested and continue to buy more and more shares. The company is also posting double-digit revenue growth year on year, and also high single-digit profit growth for a number of years running now. In addition, as I mentioned, they've recently also reduced their debt levels, and overall this is quite promising for investors. If the company can keep these debt levels low and continue their double-digit growth, I certainly think this is one to watch for investors. On to section 4, the value of the company at the moment. At the time of making this video, the PE ratio of Dicker Data is 29.1. I'd argue that this represents quite good value, especially compared to some of the other companies on the ASX, which are growing at a similar rate. Codan, for example, has very similar levels of growth, and their PE ratio is around 33.7. Their preliminary financial report is due to be released on the 26th of February. And I think if we continue to see strong results from Dicker Data, I think this company represents great value at the current price. Obviously, do your own research on that one. Maybe you've got a different opinion. Let me know in the comments below. I think given the strong shift in communication technologies as a result of COVID-19, Dicker Data is in a really strong position for the next few years at a minimum. I think this will be highlighted now as businesses are restarting and implementing more IT solutions. I think as a result, their 2021 financials could be quite impressive. Okay, so onto the last section, let's have a look at their detailed financials. Looking at this spreadsheet I've created, we can see some really impressive results for Dicker Data. Earnings per share, income, equity, and revenue growth all exceed 15% year on year. The only concerning metric is their debt levels. We can see that their reported debt levels for 2020 are around 60% debt to equity. This is a significant reduction over the past couple of years. However, we need to see this maintained over the next 12 to 24 months. We can see it's currently sitting at about 60% debt to equity, and I normally go for companies which are sitting under 50%. However, given Dicker Data's very impressive results over the other financial metrics, I still think they make a very good case for investment. The debt to equity levels are something, however, that needs to be monitored quite closely over the next couple of years. Overall, I think they're a really solid company, and they're definitely one that I would consider investing in myself. As always, I'd love to know your thoughts and opinions and have a chat with you in the comments below. If you liked the video and maybe learned something along the way, make sure to smash that like button. And until next time, I'll see you in the next video. Cheers.